I was not responding. I mean, you got to laugh about this. If you are not getting educated about current real estate market conditions, whether you're in finance, you're in mortgages, title, insurance, or obviously a real estate agent, you're doing yourself and your client base a disservice. This is the Knowledge Brokers Podcast. I'm Tom Toole. He's Byron Lazine. And little hiccup today, not a big deal. Lance Lambert will be on the pod, but because of the recent Fed meeting and all the nonsense that Jerome Powell has been talking about, more housing inventory coming, he's a little busy. We get it. He's got to put out the right information, which is what this podcast is all about. So we will have him on shortly. Byron, we had a Fed meeting this week, so plenty to talk about. The Fed raised rates another 25 basis points. Not a surprise. I believe at the beginning of the week, it was almost a 99% chance based on the CME Group's Market Watch, Fed Watch tool that they put out there. So that's kind of what was expected. This was already baked into mortgage rate pricing. We didn't see mortgage rates go up on the 30-year fixed. We did hear some nonsense come out of Chairman Powell that expect more housing inventory, which I hope he knows something I don't. What's your reaction to all this?
Yeah, they only, I mean, I'm very disappointed that Lance couldn't be here today. Whatever there was, whatever the issue was, but we're going to get him back hopefully next week because
we got a confirmation on Twitter.
Yeah,
so.
we have a confirmation in the DM and anyways, anybody that's here on the pod today, because I told you Lance was going to be on here, I apologize.
Or me, I put it out too.
But he is committed to coming on, and we're excited to talk to him, obviously. So
for sure.
Yeah. All right. So Fed Powell, they only spent there was 3 times when they mentioned housing, twice in the prepared statements for a total of about 45 seconds. And then there was one question at the very end. I mentioned on the hot sheet, I'm most disappointed by reporters and their lack of ability to understand the housing market that get to be in that room, not overall reporters, but just the ones that are in the room with Jerome Powell. Because when Jerome Powell, and I think he had a slip up of the tongue where he said there's more inventory coming. It sounded like when he said it that because the sentence before that, he was talking about single family homes. The sentence right after that, he started talking about first time home buyers. So it got sandwiched in between what sounded like people buying single family homes. I have to believe he's referring to the inventory rush of apartments that's going to hit the market. We're building the most apartments since the 1970s right now. You've got a lot of investors. I was DMing this morning, Tom, with a small time investor, in the area here, trying to put together 80 units right outside of a blue collar, workforce, big employer here for blue collar workers. I said, what's the price range going to be per apartment? Everybody's getting way up there in that luxury. They're like, well, the rents have gone up so high and I've got to max out the rent to be able to finance the deal right now. I think you're going to see a lot of apartments get in trouble is my ultimate opinion here over the next 12 months. I know there's people that disagree with me that they think apartments are a no-lose situation, but just look at the numbers on how many apartments are coming online the end of this year. It may not be your particular market, but just across the country as a whole. And that's the inventory that I think Jerome Powell is talking about, that when you get all of these apartment options that come on and they're new, and now they have to be competitive because they need to fill them up quickly because they've got bank commitments that they've got to make. They've got financial commitments with the bank that they've got to make. I think what you'll see is you'll start to see those deals 2 months, rent. And so for a first time home buyer, Tom, they may say, hey, I'll go take the deal for a year on the rental market. I haven't been able to find a house for the last year anyways. What's another year? And I'll go over there and rent. Not saying that's a good thing for them in their future, but that's just, I think, what's going to happen in some parts of the country. And that's what I think Powell was talking about. But ultimately, the reporter didn't follow up and say, hey, what do you mean by there's a lot more supply coming onto the market soon? It's an easy follow-up question that I would have almost cut him off and been immediate with that follow-up question. I certainly would have cut him off. screw it. You only get one question at a time anyways. And I would have made sure I got clarity on what he meant there. I'll give him the benefit of the doubt. I think he's talking apartments.
I hope so, because if he thinks something else is going on, then we've really got problems with that position. So I tend to agree with you. And looking at some of
And
the
by
other
the way,
comments that
Lance
came,
Lambert, who was supposed to be on today, he agrees too. That's his take on Twitter.
I appreciate that, and that's why he's coming back on. So look, things happen, Byron. Let's move on. Let's move forward here about what we got to. There's a lot to unpack. A lot of people need to know what's going on because they're going to have appointments this weekend. They're going to be in front of buyers and
Right.
sellers, and this is going to come up. So a couple other things I noted from the meeting, and Byron is a furious note taker when it comes to this stuff. Jerome Powell did say that they no longer forecast a nationwide economic downturn, which is welcome news, and they're hoping for this soft landing here. Housing activity, though, is going to be limited. And I think housing is the biggest challenge right now. I mean, we talk about affordability constantly, right? That's 7% rates are still here. We've got this lock-in effect going on. And until these rates come down, I just don't see inventory getting unlocked. And to your point, I would have loved to have some more follow-up on how they could incentivize home sellers to bring their properties to the market, how they could incentivize folks to get over this lock-in effect. Because right now, I mean, these conversations daily, and we're seeing it on our team here. This is real-time data. Hey, I'd love to move, but I got this rate that's 3.25%. We've talked about it time and time again. And there's data from Redfin. I know BAM did a report about this as well. 92% of homeowners have a rate below 6%, and a record 60% of mortgage holders have lived in their home for 4 years or less. So that shows how locked in people are. And you're getting to that point, especially the first-time buyers that did lock in there, they're probably getting ready for an upgrade in a lot of cases, because that the first-time buyer tends to move like 7 to 8 years after they buy a property. Then obviously the hold is longer. It's around 11 to 12 years according to NAR data.
That's right.
So there's, this is going to come to a head here. And one of the questions I will be asking Lance next week is, what does he make of these Morningstar predictions and these folks that are predicting rates are going to come down? Because I'm clear that's the key to unlock inventory.
Yeah, we're still up over 7%. The 10 years been very sticky. To your point about how do prices come down when we're not seeing the inventory and the overall, economy being very strong, and now the Fed talking more, higher chance of a soft landing potentially. There was a piece in the Wall Street Journal yesterday about these Fed hikes and how it really doesn't affect the average American. Americans who refinanced their mortgages for a better rate since March 2020, they've saved $42 billion on their monthly payments, according to Black Knight. Okay, so homeowners, and this is why it's advantageous to be a homeowner, right? It's 44. You're 44 times more wealthy than a renter, and all these different measurements of overall generational wealth for homeowners versus renters that we know. But just in the last few years, homeowners now have $42 billion in their pocket that they didn't have before. And that money's getting pumped back into the economy. We saw that the GDP in Q2 was above estimates again. It grew at 2.4%. It's a pretty healthy number given the restrictive monetary policy that the Fed has on us, right? And so not only do they have the 42 million savings on their mortgages, but they also have all this money that the government blew into the system. Okay. And so it's going to take a while to burn that off. And so that's why the economy is doing really well. Maybe eventually, maybe this year that money does get burned off and the economy does start to slow. Powell did say that, he thinks we'll have a slower economy at some point, but he's been saying that and saying it. He does imagine, a softer job market, but the job market continues month after month to dispute that, right? It continues to be a lot stronger than what you would think. And so that's really their last tool, the Fed, is do something with the job market. And that could affect everything, depending on how crazy they get there.
There's also another part to this, and this was brought up by Justin Barry, who's a partner at Morris, Manning, and Martin, and it's about renters. Because while the Fed is attempting to stave off inflation by raising rates, and Powell did leave the door open that there might be, I think they're done after this. That's my personal opinion. He said, we're going to see what the data says. We don't have a meeting again until September. There's a little bit of a break here, so we'll see how that plays out, which I think is a great thing, because will let it play out a little bit more than this kind of micromanagement we've seen. While the Fed's attempting to stave off inflation by doing that, it might have the opposite effect on rents, according to Justin Barry. And he said that with each round of rate hikes, the Fed puts increasing pressure on multifamily properties with floating rate loans or maturing fixed rate loans. And many owners are attempting to pass along the increased financial burden to tenants by increasing rental rates. And provided that demand, and in particular, like the demand supports the higher rental rates. So you think about that, you're actually the people that may want to, get into a home ownership position if rental rates do push up, because that's a real thing. I mean, you have these typically when you get a commercial loan on an investment property, it's like prime plus one. It's locked for 5 years, and then it floats with the market, right? Well, when they make these rate hikes, that increases the carrying costs for a lot of these landlords that are out there. And now you've got affordability on the rent side, and the Fed may be doing the opposite on inflation. You've talked a lot about how the rental data is kind of screwed, and I'll put it nicely. This may have another problem here. So I found that pretty interesting, that it might be time for the Fed to chill out a little bit with this because of what it could do to rental
They're
prices.
going to really squeeze multifamily, investors. They're really going to squeeze the office, building investor, because the vacancy on office building is much more significant than the vacancy.
Major problem.
So multifamily, at least if you're 95% full or above, you're going to get closer to being able to have a break-even point when you refinance. But the numbers, are still getting sticky there. Okay, they're still getting harder to make there. You're seeing multifamily buildings, sell at a lower price point this year than they were the last couple of years. And those are the smart investors that are seeing all this new inventory, come online. But to me, that's the biggest problem that we're faced with the interest rate is, okay, how bad do you want the commercial sector to get? And that's going to impact regional banks in a significant way. Regional banks are holding the majority of commercial loans, whether it be office building or multifamily in this country. And so, we had to basically step in for SVB and First Republic and these companies, these banks rather, earlier in the year. Do you want to step in and save 400 or 500 banks? Because earlier this week in Bloom, before Powell spoke, billionaire Barry Sternlicht, who I like to reference all the time from Starwood, he is my boy. I love the
Can we get him on?
I don't know. He's got a few more zeros in his bank account than Lance Lambert, I'm assuming. The billionaire investor. He's built a reputation of being a bargain hunter in financially turbulent times. And he believes that we're getting into a Category 5 hurricane, because his belief, right, is that Jerome Powell and the Fed is already way ahead of their skis, and that it's going to impact this commercial sector in a significant way. So he's calling it a Hurricane 5 right now in the financial sector, okay? And he's got 115 billion in assets under management. And recently, so they've got 115 billion in assets. So they can pay anything they want, basically. But recently, they did not refinance a $212.5 million mortgage that they had on an Atlanta office tower by choice. Knowing that the bank was going to come back to them, and the bank did come back to them and said, hey, let's make a deal. They did it. They basically defaulted in his Starwood, and Black Knight just did this recently too, on purpose, because they know these banks are going to start to make deals now, because they're like, well, there's a wave coming. Let's go make deals with the big players like Starwood. But anyways, going back, here's his quote. You could see 400 or 500 banks that could fail, and they will have to sell. It will also be a great opportunity. So, Powell, do you want to be in a situation where we've got to hear Congress debate back and forth? Should we go save 400 or 500 regional banks? Are we just going to basically be, all banking with the SIBs, the systemically, important banks, Bank of America and Chase and, these banks? Are you pushing everything into the top four? Or, are you going to start to have a monetary policy right now that can allow these banks to make deals with commercial owners multifamily owners that where the numbers work and there's a happy medium here. But Sternlicht doesn't see that happening. He sees the banking crisis that we saw earlier in this year, just the start of our problems.
If you want to be the knowledge broker in your marketplace, you need BAMx. It is a curated community of on-demand courses like the world-renowned Tom Toole, the best objection handler in the country, showing you how to handle seller and buyer objections on a consistent basis. Canva courses, how to design your own marketing so you can appeal to people on social media through email and look like a professional. And you get a private community with other like-minded folks like you that want to make their business better. Use the code Knowledge Brokers for 10% off. Get BAMx now. Do yourself a favor and go outwork and out-educate your competition. Well, and that's what happens when the rates kept getting pushed up and you're affecting the assets and the collateral that these banks lend on. I mean, let's call it what it is. I mean, it's no different than what we saw in 2008. Obviously, it was a much different situation, but it was the collateral values went down. They were inflated. The costs changed, all sorts of stuff. So, but the last point I want to talk about here, and then I want to pivot a little bit, Byron, to we're kind of in this market and what agents should be doing right now, what knowledge brokers should be doing to hunt. We were talking about this morning, and I think it's a really great topic. I don't know if you know this person, Melissa Cohn, the regional vice president of William Ravis Mortgage.
Melissa Cohn she's one of the top agents lenders across the country, Tom.
Yes.
And Melissa Cohn wrote my mortgage in Naples, Florida.
Wow. So she's here quoted on Housing Wire. So good for her. You're rolling with the big boys, which is very exciting, or the big girls in this case.
She's like, think of your top 0.01% like listing agent, how much they're a savage deal hunter, texting 24 hours. That's Melissa.
Well, now I'm excited for this because I was curious about this. I didn't prep you for this at all.
She's a savage.
So she talks about how the Fed signaled it was looking at these couple of more rate increases. And she said, we're starting to see weaknesses in the economy. And that may put the Fed on pause after this rate hike. And I think that's a really important thing to identify because while we're not at 2%, hiring's strong, unemployment's hovering at low levels. And then, Goldman Sachs is projecting that the Fed's going to remain on hold here as well. And a lot of people are saying if the Fed isn't careful, the critical industry may once again slow to a crawl in the fall and the winter. So I think that, look, all the experts are saying this. The frustrating thing is I don't think Powell listens to anybody except what he wants to do or whoever's signing his paycheck. So, you're talking about Melissa Cohn, and if she's that kind of person, she's in the arena, right? You talk about this all the time. You're out there. You're seeing what people are doing. Deal maker. She's on the mortgage side, which I got to tell you, I think it's been way harder for lenders this year than real estate agents, and this has been a challenging year for real estate agents.
By far.
One of the most challenging years I've seen personally. And so if you think it's hard as a knowledge broker or a real estate agent, I'd love to hear in the comments how hard this year has been for people. And there is still opportunity. Don't get me wrong. You're hearing that from someone. This is coming from Byron Lazine. Byron's got high standards. You don't understand what it's like working with this guy. So if he's praising her, and then that means a lot. Well, she's saying the same thing. She's out there. To me, this is the clear time. Like, let's take a pause. We're going to have 2 months of data this time instead of one. We're going to get into the fall. This is where the Fed needs to stop the rate hikes and let things play out. And a lot of people are calling for it right now. I just hope Jerome Powell and the Fed are going to listen. That's really what it comes down to. Yeah,
Melissa, a little story on her. She had a company called Manhattan Mortgage, I believe was the name of it. So she does deals like, I don't know if it has all her states in there in the Housing Wire quote, probably not, but
it does not.
She's licensed in like 5 or 6 or 7 different states or something like that. And just an absolute machine. I mean, obviously a knowledge, lender, if you will, knowledge broker in her space. But she's also out there like with this lightning quick ability to get stuff done. And that's what it really takes for us knowledge brokers right now is to enhance the amount of conversations, putting ourselves in the opportunity to be seen, to be heard, to have conversations. By the way, I just shared this with my team. I picked up 5 potential listings at the Cigar Lounge the other day. If you like smoking cigars, it's a great place to pick up business. Getting your work done. I've been saying this now for a year, but getting your work done in your bedroom is a bad idea when you're in sales. Your bedroom's a bad place to be if you think you're going to like put yourself in a position for serendipity in conversations. But yeah, it's hard. And obviously Melissa's in the business just like we are, where we're interest rate sensitive and we want to see these rates come down. Jerome Powell was pretty clear, okay, in his talk yesterday. They're not cutting rates in 2023. They may pause and this may be the end. And there's some belief. There's really two camps right now. There's some belief that they're done. They're just not saying they're done. And then there's some belief that, there might be another hike out there, whether it's in, September or the next meeting after that. They're obviously going to continue to collect data. The data's been good since, even just this past week when he spoke. We've continued to see good data. Just this morning, we saw more good inflation data. So he probably won't start cutting until next year. He's not going to wait until 2% inflation to cut. He'll cut well before that. He's been very clear on that, but we can't expect a cut. But what I really wanted Lance today for is, Mortgage Banker Association, Morningstar, many others say that we're going to end the year this year at 5.9% on the 30-year fixed. So that to me tells me in the next 5 months, we're going to have a 1% decline on the 30-year fixed. And is that just more the 10-year and the 30-year getting into a more normal, relationship with each other? Is there something else I'm not seeing? I'm welcoming this. I'd love to see this. This means we could basically lose 0.25% per month. And it would come at a time when I also believe in the winter, you'll see a little bit lower home prices. So this could be a real advantage to home buyers this winter, where you've got a lower interest rate and a lower home price month over month.
I'd actually argue it's also an advantage for sellers, because the best time for you to have your home on the market, Byron, is when the neighbors don't. This is documented and proven. And there's so much equity sellers are sitting on right now. I mean, it's one of the highest home equity times, I believe, ever, according to Keeping Current Matters. I don't have the stat in front of me. The savvy seller, Warren Buffett says
last
this all
4
the time.
years.
Okay, thank you.
Highest equity since in the last 4 years. 49% are equity rich in the country right now.
My man, that's why we're a good team here. So we're here every week. So with that, like I see these. I've transacted a number of times personally. I like transacting not in like the springtime. I think there's always an opportunity out there to find something when other people aren't buying. To your point, Warren Buffett says this all the time, that you want to buy when other people aren't, and then navigate however the economy is going to change, because there is that opportunity to refinance down the line. And what I also see is that there's some people, they've just been kind of waiting to move. And if rates do come down like that, and you talk about the lock-in effect, well, maybe if it's someone who's downsizing. We just met with a seller earlier this week. He owes about it's a $700,000 house. He has a $26,000 home equity line on it. That's it. So he's sitting on a lot of cash. Wants to get out a small mortgage because he wants the write-off. He doesn't want to put all his cash into his house, and he wants to buy something about the same price. Well, at 5%, that's way more attractive to him than 7%. And it's not a major cost there. And there's a lot of people like those folks that are kind of waiting to downsize. He's been in the house 40 years. It's the lock-in effect. It's exactly what we're talking about. So you talked about being in the arena and Melissa Cohn. I'm glad I brought that up. You talked about the cigar lounge and 5 possible listings.
Well, that's I met 3 guys I hadn't seen, and I didn't meet them because I knew them. Hadn't seen them in over 12 years. Before I got into real estate, we used to work at the same place. One of them has a house and 2 lots he's carving out. The other one each have a house that they're selling. One of them's 2 years out. The other guy with he's going through with the 2 lots. He's going through the survey process right now, the subdivision process right now. He's ready to go. Wants to come down to Southwest Florida, where I also own. So there's another deal down there that I'm not even counting on the buy side. And then one wants to sell in the near future and get into a new location. So, just one time of sitting there talking. And here's the other thing about the cigar lounge. When you know the owner of the cigar lounge, they know you're in sales. They know you're a promoter of their operation, of their small business. Every time I go up and there's somebody upstairs in the lounge, there's a little members lounge up there. Hey, Byron, this guy owns 3 gyms. He also owns a couple properties. Here's his name. Go introduce yourself to him. Right. These are the kind of things that don't happen when you're sitting in your bedroom cleaning up your inbox.
For sure. And I'm going to take a much more practical step, because I think you're really good at the networking side. That's something I've actually not been great at in my career. I'm awkward. I mean, you know me well enough to know it's a little. I have a hard time with that. I'm just putting it out there, very, very transparent. And I've gotten better at it. I've practiced at it. Like recently, my wife set up a block party for our whole neighborhood. It's going to be right in front of our house because we have sort of a different lot, and it's a little easier. Well, there's owners of car dealers there. There's people that and there's people that have businesses. And when you, like the owner of the car dealership, think about all the employees there, and they know you're a realtor or you're a real estate agent. You're inviting them over. Hey, let's watch the Birds game. Let's have a drink or a cigar, whatever you're doing, and building a relationship that way and showing them you're just a real person. There's something there because you can refer business back and forth. The flip side is, if let's say you're not in a place where you want to go out and do that, I'm going to give you just some numbers here. And this is just from this week. We were talking about it earlier, where we've made a commitment at our team to really focus on listing lead generation, not just calling people, working online leads. I'm going to give you numbers since Monday. This is from a single agent did this. 252 phone calls, 80 conversations, 7 listing appointments set. Just by having conversations with people. These were expired listings. These are people in their database already. It's easy to do that, but this is at the office on the floor, and then go meeting them at their house. Cleaning up your inbox, that's not an income producing activity.
No, it's an administrative activity.
Yeah, and email to me is bullshit. It's somebody else's to-do list. Usually when someone emails you, they want something. If they really want to talk to you, they'll text or call, right?
Yeah.
I don't think I ever email you unless it's something related to this.
And let's just pause there for a second. If you're in the ultra high end, your clientele might be more accustomed to jamming on inbox.
Sure.
For 99% of knowledge brokers out there in 99% of markets, I promise you those, my wife, she's got an email account, but she's only looking for emails from the school. She's not paying attention to anything else. Okay. And so that's what most people do with their inbox. We're all in sales. So we're like, oh, email's very important. It's not as important to your consumers. A great newsletter that gets a great open rate, I'm a huge believer in that. It's a great reminder. It's a
right there with you.
It's a middle of the funnel activity that can't be ignored. Okay.
Billboard.
But you got to talk to people, and you got to get in front of them, and getting on the phone is the closest step, like Tom's talking about, to getting in front of them.
Yeah. And so, I mean, that's 1 week's of activity. That's 1 week's worth of activity. So anyone listening, and forget about the appointments that were set from those 80 conversations, just to give everyone an idea what that rate is. Let's just do the math here, Byron. 80 divided by 7, you're looking at
10, 11,
12 conversations it's 11.4. So you're right on. And it's, you can't have a 0.4 conversation. So it's 12 conversations.
Dan O'Neill could, but.
I mean, he's calling his uncle, and then then he leaves the group text he starts, or whatever the hell he's doing. So
he's out of his mind.
Insanity. Yes. Love him, but he's cut from a different cloth. The point here is that no one can stop you from making those phone calls. The folks that want to do business on text, you're not going to be able to emphasize things. They're not going to hear the sound of your voice. Mike Ferry put this out a while ago. Texts and emails create reactions. Phone calls create conversations. Conversations create appointments. Appointments create sales. That's the funnel in real estate. If you don't take anything else away from this episode, write that down if you want to have a different result for the next 5 months that are left in the year, now that we're at the end of July.
Tom, in BAMx, we just did a live stream. By the way, anybody can be BAMx for the lowest price on the internet by using code Knowledge Brokers right now. But I just did a live stream this week on online leads, and I basically broke down the funnel, and I just kept it simple, did 3 sections of the funnel. And at the very bottom of the funnel, I put one particular online lead source as the most bottom of the funnel online lead source known to mankind. I mean, what do you think it is, Tom?
Could it be a Zillow live phone call connection?
There you go. Zillow Live Connect. But the most bottom of the funnel, the most attractive lead to have in real estate right now, because 2 out of 3, real estate consumers use the Zillow app over everything, every other option, your broker, every brokerage, realtor.com, homes.com. Homes.com just passed realtor.com in traffic, by the way. No surprise.
Realtor.com, man.
RDC keeps under delivering. So no surprise that homes.com passed them. But at the very bottom of the funnel, you've got Zillow live connection lead. A live connection lead is a phone call. So the best lead, the highest conversion on appointments right now in residential real estate happens to be Zillow Live Connect, which is nothing more than the Zillow bot Alex connecting an agent with a consumer over the phone and making the handoff so the agent can go ahead and get a time for the appointment and meet the person face to face. So yeah, of course, phone call is where we want to end up. If you're DMing somebody on Instagram, you get them on the phone, you're that much closer to obviously seeing them face to face. A phone call is the game. And sometimes it's just about calling people in the community and letting them know, hey, if there's anything I can do for you in real estate, right now, homeowners, going back to the stat that we referenced from Adam that just came out this week. Right now, homeowners are at their highest equity position in the last 4 years. And I don't know if that means anything to you, but if you have any questions about that, I talk to people every day that don't realize how much cash is tied up in their house. If you don't know about the opportunities you have to get some of that cash and put it to work for you, I'm happy to come over and have a conversation with you. Or just simply, is there anything I can do for you? I'm a member of this community. I want to help as many people as I possibly can right here in my town. And I'm just reaching out to create new relationships. People can't hate you to say that. They could say, hey, I got to go, but they're not going to hate on you by just being that authentic.
Well, and that's also what Byron just said there. That's something he's practiced. He's worked on the leveling out his voice when he raises the volume, when he lowers the volume, when he leans in. You saw some body language there, and it sounds more authentic the more you practice it. You can't just get on the phone and read these things like a robot.
I don't, and then if you've ever seen over on the BAM YouTube channel, if you've ever seen me and Tom on the phones, you don't hear me talking like I'm talking on a podcast over the phone. It's a very different inflection point. It's you're talking to somebody from your community, so you're gonna have a different, sense. And listen, there's when people are like, hey, just be, the worst advice in the world when
be authentic.
Be authentic, just be you. When somebody doesn't have a goddamn clue about the point that they're trying to make or whatever the education that they're trying to deliver, they just default to, something they heard online. Just be authentic, be you. Everybody is different, a person when they're at breakfast with their family than they are at a professional lunch, than they are at drinks with their college friends, than they are at the beach on the weekend. Everybody is a different, slightly different vibe of themselves. And you should put yourself in the best position to have the best vibe when you're on the phone with people in your community. And that's going to be a different vibe creating relationships, by the way, than even the phone call with your client that you've done 3 or 4 deals with. Okay. And then you're going to have a different vibe and a different personality, not personality per se, but just a different approach to the way you're talking and delivering than you do on a podcast or an interview or on stage or something like that. That's just the reality.
The knowledge broker understands this. The knowledge broker gets personality types, and now you have to communicate with people. You see a bullet point email come through, you better be direct. That's a driver. You see a lot of emojis. That's an expressive person. You might need to bring the energy. You see an analytical person, charts and graphs, data, statistics. And there's a book out there. I think we actually saw him speak. It was Todd Herman about alter ego.
Yep.
And
that
is the book to understand this, because you show up at these appointments. The client doesn't care if you're having a bad day, if you've got a case of the sniffles, if your boyfriend or girlfriend broke up with you, if something happened that, someone said something to you or whatever it is. You know what they care about? Transacting on real estate. And the person that realizes that you've got to put on, it's not a performance, it's a professional hat. And you're absolutely right, Byron. I mean, we've been in, and we've seen all the sides of each other because we go to conferences, we've been at presentations, we do the podcast here, we hang out outside of, you're coming over to my family vacation down in Bonita Springs. I mean, it's a different approach every single time. And if you don't understand that and you can't show up and be the professional, that's what consumers want. I've done transactions with friends of mine, and maybe I'm a little less buttoned up, and I'm pretty buttoned up. I'm still showing up wearing the same uniform I wear for every other real estate transaction, which is a shirt and a tie at the first interview with a jacket. I don't care if it's 105 degrees like it is here today. And you're hey, here's the process. Appreciate you guys. Let me just walk you through this real quickly. And you may be a little more casual. You're still communicating that information because that's what they want. They reached out to you to be their agent, not because you're their friend. And when the transaction over, hey, I'm bringing over a 6-pack. Let's go hang out in the backyard and you can turn it off. That is a skill that the best knowledge brokers have.
And this separates knowledge broker from everybody else, because if you're, a lot of people won't work with their friends because
Yes.
they're afraid that what you just said, well, they're just not going to give me everything because we're friends. They're going to kind of mail it in. But if you can show your friends that when it's business time, you're going to be business Tom, and it's going to be a different approach than when we're hanging around watching the Eagles get smoked by the Giants this fall. Then
Is this like 1998 you're talking about? When was the last time that happened?
Saquon signed. So, if you're going to have a different, approach to the whole relationship, then they're more likely to work with you than not. But if you're not able to articulate that and show that, then they're likely to go say, hey, let's keep, business and friends separate. And there's nothing more heartbreaking than when one of your good friends keeps it all separate. All right. Hopefully
the Philadelphia Eagles are 16-4 against the Giants over the past 10 years.
They're the
there was 4 times out of the past out of 20 games.
They kill us. They kill us. But this is
the math. It's 20% success rate, Byron.
This is
better than a Zillow lead.
Yeah, this is hopefully our year. But I hope this pod was useful, especially with some of the stuff here in the second half going into the weekend. How to think about your approach to having these conversations. Hopefully Lance is going to be on next week. And Lisa bailed on us. She's in Chattanooga, Tennessee, hanging out with some of our friends.
Yes.
And once she knew that Lance had to switch it up to
literally just left
to a new time, she just left. So she's out on some lake boat or something, and who knows what they're doing down there. But hopefully you got a lot out of this. Let us know if you did. If you haven't subscribed yet on YouTube to Knowledge Brokers Podcast, please consider subscribing. And hopefully when we see you next week, we'll have Lisa and we'll have Lance.
I'll just take Lance. I'd be fine with that.
Yeah. I mean, I'd like to have Lisa on that one, but
I would too. But if we got to pick one, I'm picking Lance.
Then we're picking Lance.